Aseem, Dhru of SBFC Finance is now joining us. SBFC saw that big block trade earlier this morning. They also reported numbers for the fourth quarter and for the full year early on, and numbers are actually pretty strong. 38% growth in assets under management, and they're guiding, I think, for about between 5 and 7% AUM growth on a quarter-on-quarter basis, at least in the medium term. Aseem, good morning. Great to have you with us here. Thank you very much for your time. Prashant this side. Can we just first get that block trade out of the way? Could you give us the exact specifics? I mean, this is the promoter entity which is sold?
So this transaction has just happened. We will be disclosing it to the exchange. We will be allowed to talk about it only after the disclosure happens.
But what is the just under 6% equity, right? Has changed hands. That's the exchange data.
That's right.
Okay, and you can can you tell us this is because we had reported earlier that the promoter entity is the seller.
Yes, so Upwood, which was owning 5.5%, is fully exited, as was the plan. And now the company from here will be the promoter. That promoter will be Claremont, which owns 54%, and the rest is now widely held.
Okay. Any further plans at all for stock to come to the market from any of the entities, in your knowledge?
No. It's done. This was what was at the start of the issue itself. We had explained that this is what would happen. That has happened, and now from here on, it's business as usual.
Okay. Aseem, hi, good morning. So since it's business as usual, let's talk about that, right? Business momentum has been pretty strong. Your disbursement growth has been about 15.5%. Is that something that can continue, and what's the outlook for FY25?
So we are coming off from a Goldilocks scenario in financial services last year, where we had a buffet of all good factors playing out. So you had very strong growth. You had extremely comfortable NPA levels, and you had margins holding intact. Going into the next year, considering the way the banking system is on liquidity, there is going to be a pressure on NIMs that we'll have to handle. Growth, the regulator also has been guiding slowing down of growth to happen in the economy, and it would eventually play out that way. There would be continued pressure on NPAs coming this year, as we would see. However, where we stand as of now, we are confident that we would be able to handle all these three winds that are going to blow against us comfortably.
All right. Hi, good morning, sir, and good to see you in. Nigel on this side. So give us some guidance then. What should the NIMS number we should be working with, and also asset quality, if there could be a bit of a blip, what is the rough number we work with for FY25?
So we have been guiding an 80 to 100 basis points credit cost for SBFC for the near future, and that we are at the lower end of it at 80 basis points right now. There could be a few basis points here or there movement. The exact numbers you can't control, but nothing really material. We would hold it around this level. Margins have actually expanded, so we have our spreads have now gone up to 8.31%. And this quarter, our cost of borrowing has come down by 8 basis points. And during the year, the cost of borrowing has gone up by only 35 basis points, which in a year like this, we consider it to be a good achievement. The rating upgrade to AA- has helped. It just came about at the right time. We think that we should be able to hold this margin. So our jaw is widened. We exited with an ROA of 4.56%. And we exited with an ROE of 11.9% on a fully expanded capital base post our IPO. So we think that we should be able to continue the momentum from here. Our cost came down during the year by 43 basis points. And we think that going forward, another 50 basis point reduction in cost is possible. We are building towards, by exit FY26, towards a 15% ROE model. And we are on track, and a little earlier, a little later, we should get there.
Okay, 15% ROE by FY26.
Yes.
Okay, 2 points. One, you said NIMS, but that was the industry outlook, right? You said you're well placed to handle it. Should be under pressure. I mean, rate cuts are at least not in the view anymore. So I thought it would be the other way. So that is one, if you could answer that. And for you, I think as a percentage of the AUM, gold loans are about 15%, and MSME is pretty much the rest, right? How
Yes.
will this mix change as you go forward?
No, this is unlikely to change. It will remain in the same handle. We think that we should be in the same handle. A percentage here or there can move, but otherwise it will be in the same handle. What we're looking at is that on the interest rate scenario, overall the US 10-year US bond is now more than 4.5. And in under this situation, with the US consumer inflation also at 2.6, 2.7, it doesn't look like there is going to be a rate cut happening anywhere there in a hurry. And it doesn't look like any in India, we also have to defend the dollar rupee. So it doesn't look like we are going to see a rate cut, hopefully, somewhere towards the end of this financial year at best. But at the moment, we are penciling in a zero rate cut that would happen. What we are looking at is that the repo rate is unlikely to move further from here. But there could be a leakage into our cost of funds from the MCLR because we borrow on MCLR basis. So what we have been doing as a strategy is that we are reducing our reliance on bank funding. It used to be 57% last year. It is down to it was 70% last year. It's down to 54% now. And we would be borrowing more from the NCD market, borrowing more from from DIIs to diversify our borrowings because we anticipate that cost of funding through banks may continue to get a little more expensive.
Okay, thanks a lot for that. Have a great day. That is the word coming in from SBFC Finance.